Welcome to the world of Test Portfolio XSX. This video was created with the help of artificial intelligence. It provides a weekly summary of key economic events. The featured portfolio is simulated, fictional, and reflects my personal perspective on recent market developments. My main goal is to explore whether the S&P 500 can be outperformed. To do this, I compare the performance of three different portfolios: my own fictional portfolio, an S&P 500 portfolio built using a lump sum investment strategy, and an S&P 500 portfolio built using the dollar cost averaging method. This video reveals which strategy performs best and why. Disclaimer: this video does not constitute financial advice and does not recommend the purchase or sale of any financial instruments. I do not take responsibility for any potential inaccuracies or errors that may occur. Ready to get started? Let's go. A geopolitical lightning strike and a tariff storm shook Wall Street while Nvidia was assaulting the $4 trillion dream barrier. The week's biggest hit was clearly Donald Trump's latest trade offensive. The promised 35% tariff on Canadian imports and the freshly floated 30% levy on EU and Mexican goods immediately hurt risk appetite, the dollar strengthened, and the futures indexes slipped into negative territory by Friday. U.S. equity traders quickly began pricing in inflationary and demand slowdown risks. Minutes released by the Fed on Wednesday revealed deep division among policymakers. Some would consider a rate cut as early as the end of July, while others would not touch the 4.25–4.50% corridor for the rest of the year. The main flashpoint of the debate is the long-term inflation impact of the tariffs. Weekly labor market data echoed this. New initial jobless claims fell to 227,000, a 7-week low, reinforcing the wait-and-see camp. Both the short and long ends of the yield curve ticked higher. The 10-year closed the week at 4.43%, the 2-year at 3.90%. Adding fuel to the fire, the White House publicly attacked Jerome Powell over the Fed's fiscal discipline. On the 4th of July, the One Big Beautiful Bill Act, ABBA, took effect, extending small business tax credits while gradually phasing out renewable energy tax rebates. The market interpreted this as a double message, stimulative on the tax side but a headwind for the green industry. Nevertheless, energy and utility stocks performed well during the week. The Red Sea exploded again. Houthi rebels attacked 2 merchant ships, causing fatalities. Insurance premiums skyrocketed, Brent jumped above USD 70, and WTI above USD 68, closing the week up 3.0% and 2.2% respectively. Shipping risk and the IEA's warning of a deceptively tight oil market project another inflation twist ahead in the US. China was not silent either. Container imports into the US plunged 28% year-on-year in June, showing that high American tariffs have already appeared in the traffic statistics. Meanwhile, Chinese inflation slipped to -0.1%, indicating weak domestic demand. Beijing is therefore floating a USD 200 billion real estate and industrial stimulus. A slight uptick in rare earths exports, however, signals that Beijing continues to fine-tune global supply with strategic raw materials, playing on the nerves of the U.S. semiconductor and defense sectors. After record highs early in the week, the S&P 500 ultimately closed down 0.22%, the Nasdaq just 0.04% lower, and the Dow fell 1.04%. Trading remained range-bound all week, with Friday's tariff news delivering the push to weaken. At the sector level, energy took the crown, plus 2.69%, driven by the surging oil price and tax preferences stemming from the ABBA. Utilities and industrials also finished in positive territory, while financials, 1.95%, and consumer staples, 1.83%, suffered the most. The latter were squeezed by the specter of margin compression due to the tariff war. On the single stock front, Nvidia on Wednesday crossed the USD 4 trillion dream barrier before pulling back by Friday on tariff risk. Tesla climbed from just under USD 300 to USD 313.5 in midweek, mainly thanks to Shanghai production news and model-related rumors. Deere, by contrast, closed down 1.3% after warning of fierce competitive pressure in the global tractor market. You can see it too. The market is now fighting on 2 fronts. On one side, the AI euphoria continues to roar, driving Nvidia-style giants to historic highs. On the other, political risks are multiplying. Whether tariff wars, skirmishes around the Fed, or Middle East shipping chaos, spilling over into rates, prices, and real economy indicators. Based on the week's moves, investors have not yet decided whether tariff-driven inflation pressure or the technology growth story will rewrite the rest of the year. How long do you think the AI frenzy can hold out against tariff hikes and high yields? Levi Rockets, Delta soars earnings recap for the week of 11th of July 2025. The warm-up round of earnings season is coming. A denim giant soared 11%, an airline 12.5%, but the frozen food king fell 3% right off the bat. Are you ready for the numbers roller coaster? No meaningful U.S. tech earnings report arrived this week, so the sector rather caught its breath before the big bank big tech marathon starting on the 17th of July. Investors nevertheless burned with Nvidia fever after the share price again approached the $4 trillion dream capitalization, but this is only a prelude to next week's busy agenda. Levi Strauss, parent company of the Levi's denim brand, beat the $1.37 billion expectation with quarterly revenue of $1.4 billion, and the adjusted EPS of $0.22 greatly outperformed previous year, $0.16. Management raised its full-year revenue, plus 1.2%, and EPS guidance, $1.25–1.30. Investors cheered. The share jumped 11%, reaching a 52-week high. Conagra Brands, the owner of Healthy Choice and Bird's Eye products, reported $2.78 billion in revenue and $0.56 EPS, both just below consensus, $2.83 billion and $0.58 respectively. It slashed its 2026 profit outlook drastically to $1.70–1.85. The market expected $2.18, mainly due to cost pressure from Trump-style import tariffs. The share slipped 3% to $19.77. PriceSmart, the Central American Costco clone, delivered $1.32 billion in sales, plus 7% YY, above the $1.30 billion estimate, but the $1.14 EPS missed consensus by a cent. The share popped 4.6% to $108.6 the day after the report. Momentum was fueled by double-digit growth in membership fees and the Chile expansion plan. WD-40 Company, the maker of the legendary spray, posted $156.9 million in revenue, slightly below the $160.6 million consensus, while the $1.54 EPS beat expectations by 8.5%. The company narrowed but raised its annual EPS range to $5.30–5.60, yet the stock fell only $1.57, about 0.7%, to $223.33. The mixed message cooled enthusiasm a bit. Delta Airlines got airborne, $15.5 billion in revenue, above the $15.42 billion expectation, and $2.10 EPS, versus the $2.05 forecast, while it reinstated its full-year profit target to $5.25–6.25. The share soared 12.5%, investors applauding the signal of stabilizing demand and the Q3 EPS outlook of $1.25–1.75. In the first warm-up week, consumer and service companies took the crown. Levi's and Delta together lifted sentiment, while Conagra's cold shower in the staples sector reminded of tariff war risks. Despite the mixed macro picture, the average profit surprise rate, beat ratio, among those reporting so far is 71%. We already exceed the FactSet average. Next week's reporting bank giants will decide whether the positive early pace holds or burns out in the global tariff storm. Which earnings report surprised you the most? The dizzying rally of Delta or Conagra's profit cut? Write in the comments how you would position your portfolio now. I haven't meddled with my strategy. I still hold several semiconductor stocks led by Nvidia and AMD, with a few smaller manufacturers in the portfolio as well. While I practically did nothing, the sector pulled itself upward on its own. Since the beginning of the year, Nvidia's share price has risen by 22.8%, AMD's by 21.2%, and the other chip stocks have also nicely followed the trend. The driving force remains AI demand. Hyperscale data center operators are still spending billions of dollars on GPUs, thanks to which Nvidia's market value hovered above the $4 trillion level for days, a historic record. At the same time, the stocks are now tightly priced. Nvidia's forward PE is around 38, and AMD's is around 37. At such valuation levels, an underwhelming earnings outlook or bad news can trigger a sharp correction. Moreover, on August 1st, a 25% US import tariff on Japanese and South Korean electronic components takes effect. Although this does not directly hit my two favorites, it can push costs higher across the entire supply chain, ultimately weighing on margins and putting pressure on the whole chip sector. In summary, the just hold and let it grow tactic has worked particularly well so far, but because of the high valuations and the new tariff front, it's now worth staying alert. If your semiconductor exposure has grown too large, consider taking partial profits or setting up a simple hedge, such as an out-of-the-money put, to lock in the gains achieved so far. Thank you for joining us on this economic journey with Test Portfolio XSX. If you enjoyed this weekly recap of the key events and our portfolio's performance, give it a like, subscribe, and join us again next week as we review the latest market moves and the progress of our investments. Disclaimer: this video does not constitute financial advice and does not recommend the purchase or sale of any financial instruments. I do not take responsibility for any potential inaccuracies or errors that may occur.